You ready to rock though?
Yo, and welcome back to another episode of the Nyc and Griff Show. Today is Saturday. We are back on a Saturday. It is June 4th at 8:57 a.m. Griff, how's your week been, man?
It's a grinder as always, Nick, but I think maybe I know Bitcoin is really seeping into the minds of the world. That's what I see throughout the week. What about you? How was your week?
Man, it was super quick. Had Monday off for Memorial Day and had yesterday off just because I took off. So I had a quick Tuesday, Wednesday, Thursday this week, and it was nice. It was nice. I got to sleep in a little bit yesterday, and then went and had a good back day at the gym with my boy that's back home from the Navy for a little bit, and yeah, excited to have a free Saturday here to probably hang out at the pool once we finish up here. So yeah, it
I'm
should be a good
currently
deal, man.
on like a makeshift, I don't even know what I would call it for myself. I'm not super proud of where I'm at. But me and my friends are like losing weight together, I guess per se, or working out together.
Okay.
And
Okay.
I mean, I'm a little under where I was at Albany. I'm like in the 250 range, not quite as big as I
Mhm.
was at Albany. I'd like to just get down to like 220. But man, that stuff's so much more difficult when like I guess being an athlete isn't the most important thing in your life. Like it's not easy. Like I've been making fun of people for a long time. I feel like an asshole. But it's not easy to like work out and then have a diet and then stay strict on the diet and then I have a fiance that wants to go out to eat and it's like, okay, we're going out to eat. Like I'm not gonna care too much about my diet. Oh, I'll just work out. You know what I'm saying? Like that's what I keep telling myself. And I'm like, but my workouts, like the intensity of them are not quite the same as a college
Oh yeah,
football workout. So it's
for
just been
sure.
like it's been a battle. It's been a slow grind down. But
Well,
fortunately, I
it's a
never
really it's a big shift in perspective whenever it's not your job anymore, right? Your job is not to be like an athlete.
job is not to be in shape whatsoever. Now, I will say, in sales, I think it helps to not be like a sloppy looking fella. You know what I'm saying?
For
Like
sure.
I don't think that helps per se.
Nobody wants to
Now,
do business with a sloppy
yeah,
guy.
anybody listening to this that's a little overweight, what have you, there is no Nick and Griff Show workout program, but if you request one, Nick can get one to you because he's still in shape. He is the skinniest man alive. The skinny Nick might have the lowest body fat percentage of any Bitcoiner I know. We could really like turn that into something. You know what I'm saying? Nick, the skinniest
Right.
Bitcoiner in the world. No, dude, I'm telling you, Nick, I don't think you're ever going to have a day where you're like, you look in the mirror and you're like, man, so disappointed. I've just really let myself go. Like, Nick eats, and that's it.
You're
Like,
not
Nick
wrong.
eats.
I do look at myself in the mirror and I'm like, damn, dude, I don't know what you're doing. You need to keep doing it.
My goodness. Are we getting into this market check? My God.
All right. We can get into the market check. Here's the market check, everybody. Buy Bitcoin. That's the market check. Just buy Bitcoin.
That's good advice.
Let's check this out here. Do we see any good stories that we want to talk about?
I
Um,
have a quick
I
ad.
don't know who Sheryl Sandberg is, but she did something.
No, I have a quick
Oh,
ad for you, Nick. You know, Bitcoin market dominance has reached an all-time high in the crypto space. I
ooh, by
believe
what
it's
metric?
I believe it's at 46%. So just like of total market cap of crypto, Bitcoin is at its all-time, like
Oh,
literally
okay.
all-time high outside, I think, of like the early years of it.
Beautiful.
Which there's been so much talk on Twitter recently, like even Peter McCormick, you know who that is?
I'm familiar with the name, but I'm not sure exactly who he is.
He hosts the second biggest Bitcoin podcast in the whole space, like literally, like he has a huge pop, like as big as Pomp. But
Yeah.
Peter McCormick was like he was saying something and I wouldn't say in defense of altcoins or what have you, but kind of just saying that Bitcoin, like I guess the all nature importance of Bitcoin and like where we can go. There's still like short-term consequences of price falling and things of that nature.
Sure.
And some of these altcoins can help in the short term And I'm just like, and he did say, like, I can't remember which one he like outright defended, but he kind of outright defended one of the altcoins, which is pretty shocking.
Interesting.
I don't know, man. Like, cause we're like Bitcoin. I would say like you and I are like hybrid Bitcoin maximalists. Like, we're not really, we don't come after anybody. We like Breedlove got attacked pretty good for saying that he believes in the free market this week. He said, I don't want to, I'm just paraphrasing here, but Breedlove did say, he was like, I don't really like the Bitcoin maximalist culture. I don't really like how people get attacked for saying things like what I'm about to say. And then he went on to say, it's a free market. If you want to buy like Shiba coin or whatever, what have you, and you get wrecked, it's free market. Like, do what you want to do. And a lot of people kind of got upset with him because he was just kind of saying it's a free market, like if there's scammers out there, don't buy what the scammers are selling. And a lot of people are getting frustrated because they're like, dude, you should be outright like, telling people they're scams, like telling them which ones are scams. And I just don't think that's like, I don't think that's your job, like as an investor, as a person, to tell other people, hey, that's a scam. Like, bro, eventually people are going to figure out a lot of these crypto projects or Web3 or metaverse or what have you, they are scams. Most of them are outright securities fraud, Ponzi schemes. I mean, by definition, things that a free
Absolutely.
market doesn't even really like allow or won't really survive in a free market. And Bitcoin's market dominance went up. So all this talk about shit coins, Breedlove talking about free market, people getting upset. Its price went down, I guess, for the day, or who really cares? But its dominance went up, and I think like over the 10-year is what really matters. Bitcoin is like the only fully decentralized. Nobody owns it. It's like the people's money. It's the only one that's actually like doing it. And in 10 years, I think that's going to prove to be pretty valuable. But we do have another guest today. Is that
We do have
correct?
another guest. We do have a guest for the listeners here. Before we exit the market check here, the Bitcoin price is $29,572, and the S&P 500 is sitting at $4,108. Also, if you notice down here, crude oil up near an all-time high. I'm not 100% sure because this chart doesn't go out too far. I haven't really dug too much into it, but a barrel of oil is hitting $120 right here. We also just here in Tulsa just hit $4. $4.29 is what I paid the other day for gas. So we are getting up there.
You want to know what hurts me the most right now?
What
Bel
hurts?
Air, it's our local grocery store. Pack of party chicken wings. Now listen, I'm not an organic fella. Okay, I don't really care if it says organic on like the package. Like, who really cares? But these organic party wings are much better in the air fryer than your Walmart brand. They just crisp up better, what have you. And dude, like a year ago, I was saying like $6 for a package of these things was like kind of egregious. I was like, I don't know if I want to pay six. They're wing, like I don't really care. Um, they're $11. Like they've literally gone up 100%. And I bought them, and the quality of them was far worse. There was less of them in the package. Like everything that we learned about when we first started getting into Bitcoin about like the different types of inflation that they put on you. Like we talk about inflation so broadly, but people don't understand like there are inflation schemes within this whole inflationary mess. One being
Shrinkflation, that's what
take
you're
the
referring
party
to.
wings, for example. Yeah, exactly. Like they literally just started putting less wings in there. They changed like the weight of all of them, and then the price goes up, and then you're kind of just like, what? Like you're kind of just like, well, dude, there's less chips in my bag. You don't really know what to do.
Deceptive nature
But
of
yeah, I don't know. It's
inflation.
be great. Yeah, it's
Well,
all happening in real time.
as always, one Bitcoin is one Bitcoin. We know that to be
Thankfully.
true about Bitcoin. We know that that is not true about the dollar. But continue to buy Bitcoin and you'll be happy in a couple of years. I promise you that. Griff, as you mentioned earlier, we do have another guest this week. We've talked a ton about Bitcoin. We've talked a ton about finances and economics and all these types of fun things. But something that we haven't really hit on a whole lot in depth and in detail, probably because we don't know a ton about it. Maybe just the basics and stuff. But taxes, man, taxes are important. I think You and I have had several colorful conversations about government and their role, what it should and should not be, right? And that's a whole nother conversation. I think, though, if you do find value in living in this society because of the rules and regulations that we follow, then we've got to pay our fair share, right? But how do we do that efficiently and effectively? That's best for all of us. That's best for the government. How do we do that? What are the rules and regulations of the game? Because if we don't know the rules and regulations of the game, how can we really play the game to its full potential? So that being said, I'm excited to bring on our next guest for this episode, Michael Lair. Michael, good morning. We are happy to have you here. How you doing, sir?
I'm good. I'm good. Good morning. I'm happy to be here, guys.
Good deal. How was your week?
It was good. It was good. Memorial Day, so short week. Can't complain. So weather's kind of picking up after a cold snap here in Tulsa a couple weeks ago. But so
I know it. It's nice. It's nice out there right now. I'm excited to get out in the sun here a little bit once we hop off of here.
Yep, absolutely, absolutely.
So you guys just kind of got out.
At what point in Tulsa?
Oh, you go, Griff. You go, Griff.
Say that next. No, I was just going to ask, at what point in the Tulsa weather sphere do you guys go out and start tanning? Like, what was it, like 70 degrees plus? You guys are like, all right, it's time to get out there. You know what I'm saying? Because here in California, I feel like I've talked about this on the show before. It's sunny and perfect all the time, which sucks. Like, I have to say that out loud. Like, I don't really like that. I don't think anybody likes that. But it's like 7 o'clock. It's like 80 degrees, sunny, perfect day. You're like, why am I inside all the time? That's how you feel. But unless it's like 90 or like 95, 100, nobody really goes out and just tans. I think it's pretty nuts. Like, it'll be 80 degrees and I'm like, all right, like pool party, like whatever. Because I'm a Midwest, guy. It's like 80 degrees is great. What is the break even point in Tulsa for you guys to get out there and just like sun it up for an entire day? 60, 65, 75? Like, does it get
Michael,
hot
what's
out
your thought here?
I think 80 is the cutoff.
Okay.
You get 70's perfect weather to be outside doing something active. Like I love like going on a run or playing rec sports or something like 70 and sunny because it's just perfect. But it's still a little bit chilly. If we're talking purely tanning, then 70 is a little cold. I'm thinking 80s and above it's about.
Yeah, you don't want to sit outside in the shade and drink a cold beer when it's 70 degrees.
Okay, that's fine. Yeah, it's still gonna be cold. All right, I just had to ask.
Michael, I know you guys just got finished up with probably the busiest time of the year. I got to imagine you're getting caught up on some things that have been maybe pushed off the back burner during that time. So what is that busiest time of the year like for you, and what's it like trying to catch up after the fact?
So probably about the 1st of February to April 15th is definitely the busiest time of the year. So it's nonstop. It's 7 days a week, almost 10 hours a day. So you're working anywhere from 50, 60, 70 hours a week, depending on what the needs are. So, but it's not too bad because then you have a lot of dead time after that. So it picks up after extension time. So around September, October is when it gets busy again. But because it is such a cyclical industry and hours worked, generally the month of May is pretty a slow month because everything that's extended is already extended 6 months. There's nothing that needs to get done. So May's a big vacation time for a lot of tax accountants. So
that makes sense.
June, we're kind of getting back into it, getting caught up now. So
sure. Well, I know that you don't just get to handle people's taxes just for free and for fun. You got to do a lot of things that put you in a position to do that. Can you speak a little bit to some of your experiences? I know we were talking pre-show about where you started, how you've gotten to where you're at today, and what it is that you're doing today.
Yeah. So, a little background on myself is I actually started out not in the CPA accounting world. I actually graduated from OU, University of Oklahoma, and I actually started out doing petroleum engineering. So did that for about 4 years, had an internship the last 2 years of it, and I don't know what it was, but on the last day of that internship, I was sitting there thinking, like, I don't want to do this. This is not fun. getting oil out of the ground is not something I'm passionate about. But I am passionate about money. And so I took kind of all the core business classes, finance, accounting, marketing, kind of in that space, the business sector, and found out accounting was kind of where my niche was. So finished up at OU, and then I met my wife, she was my wife at the time, but I met her my final year at OU, and she came up to Tulsa. So we're both from the Oklahoma City area. She came up to Tulsa to go to grad school, so I followed her up here, and that's kind of where my accounting business venture started. So to even add more of a level of fold to it is whenever I got into accounting, I was like, I will never do tax. There's nothing about tax that excites me. And here I am today. But so I started out as kind of small business, back office accountant, bookkeeper kind of thing. That worked out. Kind of got a good feel for small business owners, and I think that's what kind of sparked my interest of being able to help small business owners. Then I moved on to BOK, Bank of Oklahoma. It's a big national bank, but headquartered here in Tulsa. Started out kind of just doing some basic accounting work there. Then after that, I got the itch to get into public accounting. So I took a tax public accounting job, and that's where I kind of fell in love. So I started out here at a local firm here in Tulsa, who was pretty they're pretty strategic. They're pretty ahead of the market when it comes to public accounting. Public accounting can be pretty traditional. So there's a lot of, your old sole proprietors where they're kind of just a lone CPA. And they can be very traditional. But with the tax world, I think this is where I kind of fell in love with it. Taxes, everyone sees tax as black and white, but it's not. Tax is law, just like lawyers debate in the courtroom. So tax law is the same way. So if you can interpret something that may be beneficial for your client, as long as you're not being egregious or overstepping bounds, there's opportunity there. And that's why there's tax court cases that we can lean and fall back on. So I started this love of being able to help small business owners, because as a small business owner, your tax is going to be the biggest expense you probably have in your entire career. Same thing as individuals. If you get a high income earner, 40% of it is gone, and that's just on the federal side. So being able to really control that to keep more dollars in small business owners' pockets, I think, does more for the economy than just giving it to the government. So,
how many years have you been in accounting taxes total now?
Let's see. So I finished up at OU in 2014, so about 8 years now. 8 years now.
Beautiful.
So it's not a whole lot of experience, but I have the amount of time and devotion and passion I have in it is probably about twofold that. So I may not have 20 plus years of experience, but I can promise you I put in the time and effort to know as much as a 20 plus year vet as a CPA. So
beautiful. Well, that leads me into a question. We kind of talked about this as we were getting prepped for the show. Taxes for crypto. We'll say crypto just for the umbrella term to include everything. I gotta imagine you do. How often do you run into questions about crypto as far as taxes?
All the time. Well, it's such a new aspect of tax. I know crypto has been around for a little bit now, but really probably only in the last 5 to maybe even 10 years has it really exploded on the forefront. And so along with that, the IRS and the U.S. tax code didn't know how to treat it either. So over the last about 10 years, the IRS has been kind of trying to pass laws and regulations to get it under control. When I say get it under control, it's not so much of the tax aspect, but with anything money related, there's a lot of money laundering and criminal activity that can take place. And I think that's the first and foremost thing that the U.S. government is trying to control. I think along with that is a tax aspect. So crypto is something that almost every single day there's a new person getting into it. I know it's a little bit more attractive and a little bit more prevalent within the younger generations of our society, but every single day I find older clients that are finding their way into it. And so with that, there comes tax questions and tax treatment questions and what do they need to do to keep track of whatever crypto that they're invested in, things like that. So it's pretty much an everyday occurrence.
You know, we were talking at one point with, man, I can't remember who it was, Griff, but we had talked about this idea that at some point in the near future, you don't have to own Bitcoin to have exposure to Bitcoin, because all the largest companies are going to own Bitcoin on their balance sheet, meaning you're going to have an indirect correlation with Bitcoin at some point or another, right?
Mm-hmm. Yeah, absolutely.
Yeah, I feel like it's at some point that's just kind of the game theory of it, right? I mean, these big companies, whether you look at it from the store value or medium of exchange aspect, and I'm not sure how it's going to work with these big companies, obviously tax wise, because I think the US government is showing they don't like Bitcoin. I mean, like, look at New York State. New York State does usually set the precedent for the entire country, right? And they're literally trying to ban computers doing code. I mean, literally, like they are literally trying to ban computers doing math and using energy per se to like do that said math. That is like, one, I'm pretty sure it seems rather unconstitutional, but clearly they don't like it. All right. So like it's going to be interesting to see how the US government plays that, because obviously other countries around the world are kind of waking up to this petrodollar scheme they've been running for the last 50 years or so, and they don't like it because it doesn't help them whatsoever. Like they're getting bamboozled. So I don't know. It's going to be interesting to see how big companies in America, to like bring it back to that point, how they're going to adopt it, because Bitcoin as a medium of exchange, right? Like when Strike gets a lot of this stuff up and running, I mean, it is a literal math. I mean, it's a math question. They get percentages. Like they don't have to pay it to Visa. They don't have to pay it to MasterCard. They don't have to pay it to anybody. It's just their money instantly. They don't have to pay banks. It's like you know what I'm saying? Like those are things that I would assume that help these big companies, right? Would be reasons why they'd adopt it. I don't know.
This is their overhead cost.
Yeah. Like, so I don't know how that's going to play into the tax side of it, because when it comes to tax law, Michael, is it who sets the precedent there? Is it always federal first and then states come in, or does state law matter more than federal law? Because I know Arizona is also like already made Bitcoin legal tender, I believe. I know California is trying to make Bitcoin legal tender, at least it's like up for debate. But then you obviously have states like New York that are doing what they're doing, and then there's the federal government. So like, who sets the precedent in this space for like what's going to happen?
Yeah, so there's kind of two levels of tax law, if you will. There's your federal tax law and there's your state tax law. A lot of times, if states don't have a difference or a preference or a set precedent or law in place, it generally just follows federal. And so right now, federal has crypto listed as property. I'm not sure. Nothing that I've seen has said that a state has adopted crypto as a legal tender yet. But I do know that there are multiple states that are, like you mentioned, progressively trying to find ways to make it more attractive. I think there are some states definitely more progressive that see this as crypto's not going away. So why not attract it? Why not gain tax dollars for themselves by being attractive to other being crypto investors? So, but yeah, so from a tax precedent, most state taxes, if there's not a separate tax law stated, they just follow the precedent of the federal government, federal tax code.
So you just mentioned property, and I had seen that just kind of browsing around a little bit. So it's not deemed a commodity. It's not deemed a security or a currency right now. It's deemed a property. What exactly does property mean in tax laws terms? So I know that semantics, right, is a huge thing when it comes to this language, terminology. So what does property actually mean?
So property is really just kind of a very generic term. Almost anything could be considered property outside of legal tender. It's drilling into what type of property after it's been described as property is where things matter. So with currently the way the property that Bitcoin is labeled, when it comes to kind of some of your public company reporting, the standards there, the accounting reporting standards there, they label it as an intangible asset. So an intangible asset is still property, but it's labeled as an intangible asset. That said, whenever it comes to property, a lot of times you think of, real property or something physical and tangible. This is definitely not that. But that also begs to the question of depreciable assets and amortizationable assets. And so that's a whole other kind of level with that. So that's when you have to dive deeper into the tax codes there of what's allowed to be depreciated or amortized. And the way it's kind of written, a lot of times it's used in a trader business. So when you think of depreciable assets for a business, you're thinking of something that's used to generate income, not necessarily in an investing way, but you have a vehicle that provides services that's going to generate income for you. So that's something you would think of in that sense. When you think of something intangible, you think of like if you acquired another company and acquired their customer list. That's kind of a finite asset. The way Bitcoin and cryptocurrency in general is kind of it's an infinite asset. There's no real definitive end of when this life is going to end of this asset. And so that's where things get kind of a little tricky. But yeah, with the way tax code is, it goes property is kind of the overall blanket, and then it's diving down into what kind of property it is.
Okay.
So it is literally looked at as that right now, like some form of property, and it's what does longevity have to really do with it? Like they base these things off of how long the market's been in play. Like Bitcoin's been technically around for 13, 14 years, like that. How does that truly factor into it? Does that factor into like the literal?
You're talking about the life of an asset?
Yeah, like why does that matter so much to?
So when it comes to depreciation and amortization, so the way that works is so when you're running a business, if you have an everyday occurrence and expense, you expense it. So you have money goes out, you use that to pay for something, that's an expense. On the opposite end, there is, let's say you buy a vehicle. Well, you don't use up the vehicle in one turn, you have a life of a vehicle. And so with that, there is all of these U.S. tax codes that regulate the lives of certain assets. So you look at vehicles, you look at equipment, you look at anything that you can think of, houses, real property, commercial buildings, things like that, all have kind of a standard depreciation life of what would be the anticipated use of this certain item. And so amortizationable assets are a little bit different because they're not quite as black and white. A lot of times amortizationable assets are amortized. So essentially you pay for like a customer list and you expect this customer list to be valid for the next 10 years. So you would amortize it over 10 years. You buy, I had some other notes here of kind of what an amortization asset, like goodwill within a company. That's kind of a more difficult thing to describe, but yeah. So it's just the life thing is more of trying to determine what's the useful life of something. With cryptocurrency, so with cryptocurrency, there's not really a life to it. It's kind of an infinite life. There is no defined timeline of when it would be used. But along with that, the cryptocurrency has been classified and doesn't fall under the classifications of depreciation or amortization of being able to, reduce the value of it.
So Griff, kind of to add on to that, Tyler and I were talking a couple months ago, I think, and he had been reading an accounting book, and I guess the largest instance of, I don't know if the term was fraud or like maybe it was just tax fraud, but was exactly what you're talking about, Michael, where, let's say somebody buys a truck for, 30 grand that they're going to use for their business to move equipment around or whatever. If there's no standard as to the life of that asset, well, then, maybe we depreciate that $30,000 purchase over 30 years. Well, then we only have to pay then we can depreciate that over that 30-year period when we know that we're going to have it paid off in much shorter amount of time. It's basically evading taxes, right? And so that's why those standards of the asset life are put in place so that everybody, when they buy a truck, they know that the useful life of that truck is X amount of years. Or, I think residential real estate, right? You can depreciate over 30 years or 27 years, Michael, is it?
Residential, I think 27 and a half.
27 and a half. Okay. Yeah. So that's deemed as the standard useful life of that residential asset.
Yeah.
Which is, anyways, yeah. Griff, what were you
gonna say?
say?
Real property is a little tricky because it's something that you can depreciate, but it truly, gains value over time. So real estate is a very tricky thing. I think the reason why they allow you to depreciate it is because you are going to have upkeep with it. It's something that you're going to have to pour money into to keep its value.
That's a very fair point. I had read something. This is a little off topic. People who make $250,000 on average, I don't know what the actual statistic was, but it was like the majority of people making $250K in America are still living paycheck to paycheck right now. Like, I find that to be pretty nuts. But back to the tax point of it, Bitcoin, it's not property then. I mean, like, that doesn't really seem like it's ever really going to fit in that bubble because just knowing how Bitcoin works from my side of things, it's like, it's not. I mean, the property thing is kind of like I like that narrative. Like, I think it works. I think that there is use for Bitcoin in that way, potentially as digital property. But at the same time, kind of screw that. Like, I also feel like the nuclear family is being attacked pretty heavily in America. So I feel like that whole Bitcoin narrative is own your digital property, live in the meta, blah, blah, blah. It's like, it's literally just another way for them to be like, you're never going to own a home. So own Bitcoin, you know what I'm saying? No, I would rather own a home than Bitcoin. Like, I'm just putting it out there. I would rather own 100 homes than Bitcoin. Maybe not 100, just depends on my lifestyle, right? But Bitcoin doesn't fit into property at all. Like, Bitcoin is not, it's not actually, it is digitally, but what is digital property? And what's its useful life? Infinite? I mean, like, Bitcoin really, it is your grandchildren's money. Like, that's really what the play is here. I mean, the play is so that your great grandchildren have 10 million Satoshis, and you're just like, kind of like, boom, bitch, like, they have all the money. You know what I'm saying? Like, that's like, inevitably, Bitcoin is such a long-term play. It even plays into your, like, I do buy some of my Bitcoin full and well knowing, like, the price of it could hang around under 100,000 for a long time. I'm just being honest. Like, there's a lot of regulation. Like, we're talking about with taxes, there's a lot of things to sort out. Is it property? Is it currency? Is it trying to think of other ways, like miners? Like, could you speak on some of how are they going to tax miners? Like, all of their equipment is depreciable against this thing that they're mining that you're also saying is potentially depreciable. Like, it's a very interesting market. And so, like, that's why I'm saying, like, Bitcoin is a long play. People who are buying it for the short term, I mean, like, don't get me wrong, like, I'm to the moon just like everybody else, right? But, like, this conversation alone is why I'm kind of just a little skeptical about how quickly Bitcoin can shoot up. Like, is it property? Is it currency? If it's currency, does that mean, like, if they rule tax wise, it's a currency? They can't tax currency, right? Like, they can't just tax a legal tender per se. Like, that doesn't work, does it?
Well, so kind of address everything that you kind of mentioned. So I understand that crypto in my mind really is more of a currency than a property. But as for the way it's ruled by the IRS right now, it is property. That's what the IRS use it as. It views, not necessarily like a commodity, as in like gold, but you might as well think of it as gold. It is just something that you can exchange for currency. That said, to kind of mention it, there are actually 2 countries in the world that have recognized Bitcoin as currency. One was relatively recently, but I think El Salvador was the first one to recognize cryptocurrency.
The South African Republic or the Central African Republic was.
Yeah. And so but yeah, so to kind of talk about the mining aspect of it is you've got to think of it from a tax perspective, and that's where my mind goes with kind of figuring out how this gets treated. As is it's taxed the same as property. So if I was in business and someone gave me a truck in a form of payment as opposed to giving me cash, that is still the fair market value of that property is what I have to recognize as income. So it's the same thing with kind of Bitcoin. Is if you got paid in Bitcoin for services or your business, you recognize it as income as the fair market value of that property. So when we think about miners, one kind of interesting note is there are a lot of states. So New York, like I said, is unfavorable for Bitcoin and cryptocurrency, but there are a lot of states that are trying to be pro cryptocurrency. And Texas is actually one of the bigger ones. And recently, to talk about mining, as of I think it was April, the end of April, Fort Worth announced that they are actually going to begin mining Bitcoin, or I came up as Bitcoin or just all cryptocurrency in City Hall. And so that's going to be kind of interesting to see that. So, okay. Okay, so yeah, so a bill was introduced to make Bitcoin legal in Arizona. So yeah, so Arizona, yeah. But as for right now, there's all the states, as far as I'm aware of, unless there's something relatively very recent, all the states are treating cryptocurrency and Bitcoin the same as federal right now. So actually, kind of to answer your original question about miners. So if you're mining Bitcoin, so back in 2014, the IRS released IRS notice, I think it's 2014-21, that kind of it was the biggest news about crypto from the IRS and the US government that kind of gave some details of how the IRS is going to treat it. And so one of those is, I think they mention mining in that. If you are mining Bitcoin and you receive Bitcoin, whatever the fair market value of that Bitcoin you receive, you would have to recognize as income. So whether it's personal or whether it's business. If you are in the business of mining, then that kind of adds a whole other fold of, like I said, your equipment, your whatever things you purchase to mine, you can depreciate that because you will have to replace that over time. It will break and fall down. And then as you mine it and bring income in, that is ordinary business, trading business income. But if you're without mining, it's a whole kind of another different property because then it's more of like an investment, if you will. So when you purchase Bitcoin, that's your basis. When you sell it, that is what you sold it for. The difference is gain or loss.
Yeah.
I do have a little, I guess, an interesting spinoff here. So how familiar are you a Bitcoin hodler yourself? Are you into the space, or are you
not? So yes, I mean I do own Bitcoin. I do not. I use it through exchanges, not necessarily through my own wallet.
Man, exchanges, huh?
Yeah.
But
because for me, I mean, my life is busy. I got 2 small kids. Work is constant. So I just wanted to dabble in the space. So I think I'm trying to think of. I've got it in a few different exchanges, but I think Coinbase is where I have most of my crypto held.
To not jump you on that, to talk about some other stuff, because obviously there's other crypto, right, like in the space. Well, listen, I the whole exchange thing I think is so wild. Like you guys know, like Coinbase put in their new terms of conditions, like they do not have the requisite Bitcoin to fill. Like if there was a Bitcoin run on Coinbase, they would not be able to fill it. Like they wouldn't even be able to come close. Same with Robinhood, same with pretty much even Binance, like had to say the same thing in their new terms of use. But this is not a cold storage attack. Okay. This is there are other altcoins, right? There's Ethereum, there's Solana, there's Tether, and there's these things called pre-mines, right? Like these people essentially, like Ethereum, all Ethereum is like the 2008 housing crash happening so much faster than whatever it took America. I don't know how many years it took us to get to that point where we were like, just like, as soon as you pulled that little house of cards, it just kind of all fell down. You know what I'm saying? Ethereum is that, but it's literally a bunch of different little like altcoins and like ETH tokens that basically a little group of people get together, little developers. They kind of give each other a vast majority of these tokens, and then they give some to celebrities. And they say, well, promote this as it's going to take down Netflix. I'm telling you, this token space is going to destroy Facebook, and Netflix is the next greatest thing. But in reality, they're literally just sharing all of the shares in this company with their friends. And then people buy in, price goes up, and then the entire time they're slowly pulling away. How do taxes look at cryptos that pre-mine and do things of that nature? Is that pretty clear-cut fraud? Is that not allowed? Is that securities fraud? Is that not really, like, does that take it out of the same tax lane as Bitcoin at all, per se? Like, does it make it different if they're doing things like that?
So to make sure I'm understanding, when you're talking about pre-mining, you're talking about like essentially almost like someone creating a coin token or something.
You can create them in 10 minutes. They literally create the token. I mean, you can make them like hotcakes. Like, you can just start these things out like pancakes at a Sunday church event. You know what I'm saying? But
so currently, because like it isn't classified as currency, there is no securities or anything related to control or regulate crypto right now. That's why it's kind of considered kind of the wild west of investing. And so along with that, when it comes to from a tax perspective, just kind of bring it back to there, it's all related to essentially your gain or loss within something. So if you go in and create your own coin token, whatever you want to call it, whatever it cost you to create it would be your basis. If it didn't cost you anything to create it, you have zero basis. So now you go sell it to someone for $100. You have zero basis, sold for $100. You have a gain of $100. So that's kind of what that would look like.
So as long as it's property, it's pretty much kind of a fair, like you're saying, it is it's absolutely a Wild West if it's
kind of
that way.
Yeah, it's no different than trading baseball cards. I mean, you can create your own baseball cards if you want to and pass them off as fraud. Sell it to your neighbor or someone on the internet. But at the end, it's buyer beware kind of thing, and which is kind of scary to think about. Because, like you said, there's a lot of these out there a lot of coins out there that are.
There's no investor protection.
Yeah, someone that's maybe technical and smart trying to get a get rich quick scheme.
Yeah,
Michael, could you hit on short-term and long-term capital gains as Bitcoin is treated as a subset of property?
Yeah. So essentially, when it comes to tax treatment with short-term and long-term gains, so short-term is anything that was held for less than 12 months. So if you buy something and you were the owner of it for 6 months and then you sell it, well, you didn't own it for a full 12 months. That's a short-term gain. If you buy something and then a year and 1 day later you sell it, you held it for more than 12 months. It's long-term. The reason why that matters is from a tax perspective. When just for owning something, it doesn't really matter. But from a tax perspective, it does, because there's different levels of tax treatment for long-term and short-term gains. When it comes to tax from a federal perspective, and I'm gonna kind of talk from a federal perspective because every state is kind of different, and we can touch on some of those state questions later if you guys want to talk about that. But from a federal perspective, the time value of money is important. So that's the reason why they give you a tax preferential treatment for long-term gains. So you parked money for over 12 months. Inflation happens, whatever you want to call it, the market changed. At the time value of money, you need to be rewarded for investing in a company, investing in a startup, investing in something. That's why you get a tax preferential treatment for long-term capital gains. So that's why with crypto and Bitcoin, it's important to kind of know your holding period for each coin or each portion of a coin. Because we can probably get into that later too, because there's so many different ways to buy and sell it and change your treatment, do some, tax loss harvesting or things like that. There's just a lot of things that you can do with that.
So I know that for the vast majority of conversations that we have, we're buyers and holders of Bitcoin.
Mm-hmm.
We're not planning on selling anytime soon. But if that time does come, or when that time does come, and if there are still capital gains taxes that have to be paid on the sale, and realized gain of Bitcoin. You mentioned a second ago, I think it leads us right into tax loss harvesting. So, it's great with exchanges. You can see, okay, I bought $100 worth of Bitcoin. Here's my cost basis. Here's how many Satoshis or how much Bitcoin I bought. And I know that there's first in, first out, last in, first out. And then there's also selective, correct? And could you speak to that a little bit on how you may be able to use tax loss harvesting strategically to sell specific and selective portions of Bitcoin?
Yep. So I'll kind of compare it. I'll talk a little about just kind of ordinary, trading on the stock exchange. So trading, company stock. I'll kind of talk about that first. It kind of leads into it. So from stock perspective, you can also do these, first in, first out, last in, first out, and selective. But most exchanges, unless you keep a detailed track, which most people are not personally buying stock and selling stock through using, a Fidelity, Robinhood, Charles Schwab, whatever you want to do. That's what they're using to buy company stock, to buy your Facebook stock, Amazon stock, whatever you want to call it. The default for the IRS to tell these, brokerage firms or exchanges is first in, first out. So if you buy something, at $100 in January, and you buy it again at $50 in June, and then you sell again, in December, it's going to sell that January piece first. The biggest thing, so you do the same thing with cryptocurrency, but with cryptocurrency, it's less regulated and doesn't say, because it is property and not necessarily stock. You can kind of keep track of your units or coins or tokens a little bit better to be able to do tax preferential things as opposed to just defaulting to FIFO. The biggest difference, and to touch on the tax loss harvesting, the biggest difference between stock and crypto is the wash sale rules. So the wash sale rules is something in stock that, let's say you buy something at $100, it drops to $50. You then sell it. Well, now you have a $50 loss. Now, if it drops even lower, let's say to $20 within 30 days, you're like, well, I know it's going to go up from there. And you buy in at $20 within 30 days of selling, that wash sale rule knocks out your $50 loss. So essentially, if you buy and sell the same stock within 30 days, any losses you had when you originally sold that, when you first sold it, get thrown out the window. And so that's why a lot of people will lose that benefit. And you'll see, and we've seen this a lot recently with with Robinhood, a few years ago, really trying to get to the average, everyday retail trader. A lot of people didn't understand these wash rules. A lot of people got burnt from a tax perspective on it. With crypto, because it's considered property and not listed on the stock exchange, it doesn't have those rules. So one of the things that you can look at, and so let's just think of Bitcoin. I'll use Bitcoin as an example. So let's say you buy, one Bitcoin for $30,000. 6 months later, it drops to $20,000. So you have a $10,000 loss right there. If you wanted to use that loss to offset other income in that current year or other gains in that year, you could essentially sell that Bitcoin at $20,000 and then immediately buy it 5 minutes later for $20,000 again. What you've done is you created a realized loss. So you're still holding Bitcoin the same as you did before, but what you did is you created a tax loss there. So now you have $10,000 of a loss to offset either other gains or other types of income. The only thing, the caveat to that though, is it's not necessarily you're just gaining tax advantage, you're deferring tax in the future. Because let's say, a year from now, it jumps up to $50,000. Well, if you would have kept it at $30,000, that's a gain of $20,000. But now your new basis is 20 because you recognize that loss. Your gain is 30,000 in the future.
Sure.
And so it's one of those. It's maximizing your tax in any given year, looking at your scenario that year as opposed to what it's going to look like in the future, to be able to use these non-wash sale rules to tax loss harvest.
Which is why people want to work with people like you that know what you're doing, that are seeing the ins and outs, that are doing it all day, every day, right?
Yeah, exactly. So consult your CPA advisor.
Another piece that I was thinking about here as we were getting prepped up and thinking about some of these things is the necessary or maybe non-existent responsibility to report the ownership of property. Is there any mechanism that we have to follow as far as reporting the ownership of our Bitcoin to the IRS? I don't really know the right question to ask in regard to that, but can you hit on that for a second?
Yes. So recently, I think as of November, are you familiar with the infrastructure bill that Biden signed last November? So snuck in, yeah. So there's a bill signed that was more for a bunch of other things, but within that bill, they added some cryptocurrency reporting standards. So to address, I think your first question is there any reporting requirement for just owning Bitcoin? I think that's your first question.
Yep.
So right now, there is no reporting requirement for saying that you own Bitcoin. That said, there is. Are you guys familiar with the foreign financial bank account reporting? So essentially,
I have a little bit about that. Yeah.
So essentially, if you own an interest or have an assigning authority or have a bank account within another country, you essentially have to report that to the U.S. government on your tax return each year. It's part of the financial crimes unit. So there was some things put out there, guidance from the IRS that talked about, well, if you own cryptocurrency on a foreign exchange, so let's say you're trading Bitcoin on an exchange in Europe somewhere. Well, now they're saying, well, that's treated as kind of like a bank account. That said, so then there became back and forth between the AICPA and the US government. Well, if you're saying that, so is crypto now currency then? Because that's what that reporting is for currency, not property. And so there's been back and forth. And so currently, as it stands, you do not have to report, foreign held exchange currency, but it's rather to be safe than sorry. So a lot of CPAs are advising, let's just go ahead and do it if you own Bitcoin on, a foreign exchange. But currently, as it stands, you do not have to. So as for when it comes to just reporting of holding currency, there's no real reporting requirement with the IRS. That said, there are now reporting requirements within that bill I just mentioned that you do have to report transactions. And so the way it was written is, let me pull up my notes real quick, is exchanges. So we talked about, like I said, your Coinbases or things like that, that you're not necessarily holding your own within your own wallet on a flash drive, if you will. Anything that it's held on an exchange. Any exchanges there is now reporting requirements for Robinhood, for Coinbase to report any exchanges of cryptocurrency like they would report stock. And so that's where a lot of these, it's to the twofold. Obviously, the one that the government tries to push is it's to help prevent criminal activity, but really it's to help prevent tax evasion. And so that's where those things are reporting. So if you exchange cryptocurrency on a non-exchange platform, which I'm not super well versed to be able to talk on that, but I'm sure you guys can. That's where you say you don't have any reporting, but you still have to recognize that as income or loss if there's any gain or loss associated with that. It's one of those. There may not be any tax reporting done, so it's kind of at your own discretion to make sure you report it.
Griff, I think you were going to say something there. You are muted though. Oh no.
No, this is just such like an educational experience for me. You know what I'm saying? So it's so interesting how, I mean, seriously, how a commodity on the internet that doesn't have a CEO, that doesn't have a CEO, like there's nothing, right? There's no company. It's literally as comparable.
A bunch of code running on computers all over the world.
Yeah, and it's just so interesting to see how it's taxed, right? And my whole thing is Bitcoin really is like a fix the money, you fix the world kind of thing. Like that's how I look at it. I don't really I do love the investment of Bitcoin, like as me and Nick talk about, like the network of it, but I don't really think about Bitcoin in these tax terms. So everything that he's saying, I'm just learning, obviously, because there's other people that are only looking at Bitcoin as like a get rich quick scheme, and they're kind of legislating and making these rules based on that. And I do find it so interesting. How often, in your experience, Michael, did they put like a Bitcoin reporting law or a tax law in a Biden infrastructure bill? Like in like they kind of like slip things in there very often. Like, are those things that you always have to like keep an eye out for?
Yes.
Yeah.
Yeah. So there are, tax law is ever changing. So great job security, but tax law is ever changing, and you do have to monitor pretty much every bill. That said, there are publishers and companies out there that's what they specifically do. So I am not necessarily going through and reading every single bill. I am getting the download from these information outlets. But yeah, so there are there are bills that are purely just tax bills, and there are bills that we talk about the infrastructure bill. That is, the infrastructure bill was essentially raising taxes to improve infrastructure within the U.S. So it really was a tax bill, but it doesn't. You hear infrastructure bill, and you don't immediately think this is a tax bill. And so there are a lot of things that they'll, I don't want to call it slip in, but just kind of add to it from a tax perspective. So yeah, so by infrastructure bill, there was a lot of things that talked about taxing unrealized gains on the super wealthy, taxing corporate tax differently, lots of the things possibly. There was a lot of things that were discussed, back and forth and what they decided on. But with that, is cryptocurrency exchange reporting. Like, why was that necessarily need to be thrown in there? It didn't necessarily have to, because it didn't have anything to do with the tax perspective, but it is a tax bill, so they're going to add some tax reporting things with it. So yeah, it's cryptocurrency is just, it's such a different animal than anything the world has kind of had to deal with. Because since forever, currency has been currency. There's been no alt currency, if you will. It's currency or it's not. And now there's this thing that half the world treats as currency, the other half treats it as property, the other half treats it as an investment. So it's a unique vehicle that it is.
Sure.
That it's really hard to kind of the governments of the world to put their head around it and find a unified way to treat it. So
Bitcoin is, I like to say, it's just pissing off a lot of people, because we've been in, like you're saying, there might be a lot of like taxes change every year, right? I don't really, whether that depends on the president or whoever's in there or whoever they're trying to please that year or whatever. You know what I'm saying? At the end of the day, Bitcoin is like it is the supreme audit to that whole thing. So I don't think anybody really wants it to happen. We've been on the SWIFT banking system for how long? And it's like, it's not like it's great. We've been using fiat currency for how long? It doesn't mean that it's like the end. Do you find it weird that we like literally just sit, like, money is just supposed to be this thing, like it's dollars and inflation, and the government controls it, and like that's all it is? Like, do you find that odd? I know you're not a Bitcoin guy, but like that's what got me into the space, is I just found it so odd that what do you mean we can't make money better? Like, yeah, sure we can. Like, why would we not be able to make money better? Like, money should get better over time. It shouldn't get worse over time. I don't know if like there is an inflation tax incentive. Like, do we all just get to write off all this inflation this year? And like the government, like how, like, you know what I'm saying? Because how I look at it, I'm like, okay, there's tax breaks for freaking everything. And then like we're all just like kind of playing this game. But what about inflation? There's no like inflation tax break, and we're all kind of getting hit with that. Is that kind of is that what will break it off? I don't know. But I don't know what it's going to be that gets people to kind of come around to some of this stuff. Like, I don't know what you think, Nick, but it's just so weird, like hearing all these tax things, because we get on here and we talk about the great fantasy world that we want to live in and how great Bitcoin is. But there is this very real side to it, right? Which really is in the trenches and what you're doing, which is the tax law of it. That severely either inhibits or helps the innovation of any new technology, I would say, right? Like, is there anything in the last 10, 15 years you've had to deal with that is at all similar to Bitcoin and crypto? Like, in terms of like, I don't know, like literally creating new tax laws and like just changing the whole game kind of thing? Like, is there been anything similar to this in your experience? Or is this really, like you're saying, just a beast of its own?
Not in my lifetime that I've been aware of. I mean, there's always, as the world becomes more global, and information is shared more, it's shared easier, shared easier. There's a lot of things that are evolving. But as for something as unique as cryptocurrency, I have not seen or experienced anything like this in my lifetime. I mean, there's always been assets or property, something a little bit more tangible, that, certain people would value as currency, but nothing as blatant as cryptocurrency. And so, yeah, so it's such a unique thing. And yeah, and kind of comparing it to regular currency, I mean, you mentioned a lot of good points. It's just, I think when people think of currency, and more specifically when countries think of currency, they obviously are putting themselves first. So they want to do what's in best interest for them, when it comes to their own currency. They're just like, I can't remember, how long ago, whenever we moved off of the gold-backed to the U.S. currency, where it's just there's nothing backing it now. There's just a lot of things that.
I said 1971.
Gotcha. So there's a lot of things that I don't think any country is ready just to accept this new form of currency, even though it must be maybe a better currency, because there's no incentive for them. There's nothing really incentivizing them to make the switch, because the U.S. government can't just keep printing dollars now. They can't just keep printing bitcoins as they need it. So it just cryptocurrency holds the owner and real debt and real dollars, I guess is the way to kind of say it. Hold them accountable. And right now, that's not in the best interest of any government, because everyone should be passing dollars. Yeah.
Well, the United States are the most. Sorry.
I was going to say, Griff mentioned inflation earlier, and he was kind of chatting about that a little bit. What is your thought on that, Michael, as far as I mean, this is the major issue of easy money. If you think about easy money and hard money, this is the major issue of easy money, is just being able to print it with no cost of creation. And the effects of it are what we're dealing with right now. I mean, it's $4.29 for a gallon of gas here in Tulsa, Oklahoma. What is your thought on that stuff, Michael?
I mean, yeah, inflation is killing everyone right now. And in my opinion, I don't see it slowing down or stopping. In my personal opinion, I have nothing really to say why I believe this or not. I mean, I wouldn't say like I've done a deep dive research, but I mean, just with the way that the economy is, with the housing market, the vehicle market, inflation in general, I don't really see it slowing down or crashing, in my personal opinion. I think just it is the way it is. I was thinking about this the other day too, whenever we talked about tax breaks, and I was thinking about this the other day of what's the major reason for all this inflation? Well, obviously, COVID had a big hit, economy's bouncing back, makes a little bit of sense, but I look back at all of the tax incentives that were given out because of COVID. We talk about PPP loans. We talk about all of these tax credits. I mean, all of these were essentially free dollars given. And they gave out millions and billions of these free dollars. What I think it's done is the people that had access to these funds are doing great right now. But I don't think those dollars have necessarily trickled down to the everyday American. And that's why I think everyday Americans are getting hit really hard with inflation, while half of the economy is doing great too. So it's just a weird time.
And anytime you're giving a tax break so large or so big like that, or you're putting out such a because I work in medical sales, so obviously hospitals have had a very large, and I wouldn't say very good, incentive over the last 2 years. But they got to make money. I mean, business is business. It is what it is. I have not learned enough about economics to go like, how do you place such a large tax incentive into what we try to say is somewhat of a free market, capitalism, whatever? Like, how do you place something so large into there and then know what the consequences are going to be? On top of money printing, like, I just tax incentives to me, like I get it, right? Like it is more expensive for a government to go purchase a bunch of homes and have a bunch of low-income people live in them than somebody to provide rent for somebody and just buy the homes. So I get the incentives program aspect of it, but like, how does that actually just affect the money you're using within that incentives program? It's something that like I still like I've never really heard anybody talk about it because I don't really think that's like built into any of these economic theories that we have. Because would you say like in America, I mean, maybe I'm wrong about that. Would you say like, is America the most robust tax incentive program in the world, like from government to businesses to people? Like, do we offer the most tax incentives compared to other countries? Do we offer less tax incentives? Is just different than other places?
I would say just different.
Yeah.
I mean, I'm sure you guys are familiar with offshore bank accounts, or companies moving to different countries because there are tax incentives. So
Right.
the U.S. is the tax incentives here are more, what you're doing. You can get tax breaks for how you're employing people, exactly what you're doing. Where other countries are just low tax states or low tax countries. So, I wouldn't say, America is not necessarily a high tax country. There's definitely, other countries that are much higher tax, but there's also a bunch of countries that are much lower tax too. So it's just kind of different. But as for like the incentives, just kind of talk a little bit more on that. So a lot in the past, in years past, those incentives have gone through economic models. So there are reasons why there's R&D tax credits. There are reasons why that there's low income housing credits. There's a reason why that there is I can't think of one of them, but just incentivize employees why you would want to hire them, because those have been proven that you give tax breaks here, you give money there, it kind of balances out. As for with just the how quickly PPP loans and employee retention tax credits and all of these COVID money incentives were written, passed, and distributed. I mean, there was no time to really see what those future consequences would look like. The economy was just hurting so bad because of COVID that they needed something to keep it afloat. So I think we're all just kind of dealing with those repercussions right now without really knowing what's going to happen.
Who's coming up with the models, or do you get like what models like is there like websites? Are there people who post these models? Like, is that just something you've seen? I just would love to like read those models myself because who's coming up?
So when it comes to any tax laws that have been passed in the past or have been passed in the past, they run models through it, and that's how they get it passed through Congress. So you could probably Google them and find some of them. I'm sure people have ran models on the PPP loan stuff, but I mean, let's be honest, it was so fast. It was so fast. I mean, it got introduced, it got passed, and then distributed all within like a month. So and so So as for a specific citing source or something, I don't say know anything off the top of my head, but I'm sure you could do a Google search.
Yeah, no, all good. We definitely in America, Nick, you can speak on this too because you study it just as much as I do. We've been on the Keynesian economic model for I want to say like a good chunk of time now, like at least 50 years, maybe even longer than that. I guess it would be time to. I think it's time with gas in California, guys. At $4, I would kill for $4. Kill for it. It'd be amazing if I had $4. I was in Tahoe yesterday, man, because like I work, so I cover Sacramento to Reno, and Tahoe's like right in the middle of it, and it's like great. I love going to Tahoe. I was stuck, man. I was stuck there, and I had to get gas to get home. It is what it is. Tahoe was like $7. Like that's all you could get it for. And then I come to Sacramento and I go, well, like, what's it going to be here? $6.30 is like what my Chevron produces. Shell's like a little lower than that. And then like the cheapest I can get is about $5.99 right now. But I don't know what like economic model supports anything like, and where we're all sitting, right? Because it's like, I think anybody can very clearly tell that unless you're really, really wealthy, like, and I mean really wealthy, not just like doing well for yourself. I mean, like really doing well for yourself. This inflation is hitting you hard. Like, I mean, it's just nobody's enjoying it. I'm certainly not enjoying it. Like, I'm a young guy working my ass off, trying to make a lot of money while I have all this energy, because I'm not going to have all this energy forever. Maybe I will. I don't know. But like currently I have a lot of this energy. And I just don't know what incentive or what they're going to do to get themselves out of this little hole. How long have, I guess I'd say, like, have tax incentives always, like, have they always been so big in America? Like, I feel like I need to go back and just study, like, the history of income tax, because, you know, a lot of people talk about, like, there's been times in, like, war times in America where, like, income tax has been as high as, like, 90%. You know, like, are we headed towards that kind of a time where they need to tax the hell out of us to get ourselves out of this hole as a country?
Well, no, Griff, they'll just print it. What do you mean?
No. There's, like, real consideration right now for them to, like, increase taxes to fix what's going on. I mean, the only way to get this money is to take it out of the middle class, as we know. I mean, you can't get it from the ultra wealthy people in this country. You can try all the do all day long, but you're not going to make any friends, and you're not going to get it passed, and they're not going to pay it. like we're saying, like, there's no way. So the only way to really get it back is to increase taxes on the middle class. I don't know if you studied, like, past times where, the income tax is 90% on the ultra wealthy, like during, I want to say that maybe it was in the 80s, or the last time it was that high, maybe it was the 70s.
I think that was the 40s and 50s.
What happens to the middle class during those times? Do they just get taxed into oblivion, essentially, and, like, we just kind of there?
Taking where we're at, we are sitting at, I want to say, if it's not the lowest, it's getting very close to it. The lowest tax that there's ever been in the U.S. I mean, Nick, you might be able to pull up a model, but I mean, over the years, you look at the highest tax bracket. I think it was in the 80s with Reagan that he slashed tax, that capped the tax bracket. Because, like you said, that for the longest time, I mean, the highest tax bracket was 90%, 80% up there. As for taxing it, there's no telling what the future holds. I mean, that's kind of some of the biggest thing I deal with some of my clients right now. Is some of the biggest things that you hear about is retirement accounts. So you think of Roth IRAs or Roth 401ks versus traditional 401ks. So pretty much what you're doing with IRA accounts or retirement accounts, looking in the future, is what's the tax going to be like in the future? Right. Is it better on a traditional retirement account where you take the tax deduction now, but 50 years from now you take it out and you pay the tax then, or are you better paying the tax now because you feel like tax is going to be higher in the future? And there's no real, not that I've seen, to be able to tell one way or another what tax is going to be in the future. I think the first thing that the government tries to do to battle inflation is mess with the Fed interest rate. And so I know they've been raising it, and I don't see any time them slowing down from raising it. So it just kind of trickles down from there.
I do. They can't keep raising it because they don't have the money to keep raising it. They don't, like, they are stuck. I mean, because back in, what was it, 1980, the early 1980s, it was as high as 18% was the federal funds rate at one point in time because inflation was so bad. We can't do that now. We're there is no, like, raising it to 18%, or else what are all those countries going to do that have US dollars sitting on their balance sheet? And they're just like, this is what we hold. This is our gold. These shitty dollars. How much longer, I wonder, do, like, these small countries go? Not even small, just like, or even our allies go, like, yeah, like, I don't know what these American guys are doing. Like, those 12 guys that run the Fed, like, they must be drunk or something in there. Like, I don't know what they're doing, but, like, at some point, like, these guys can't keep, like, trusting America's basically this. We're describing a system, right? Like, I know nobody likes, like, that's kind of like an annoying buzzword because quite honestly, like, that whole BLM thing, like, that happened during COVID, they totally jacked systemic, like, all those systemic issues that they wanted to talk about. When Nick and I talk about it, the systemic issues are that they made money shitty. It has nothing to do with, like, white and black or this, that, or the other thing. It's always been rich and poor. And it's just so frustrating because now we're sitting here having, in my opinion, I'm learning a shit ton of this podcast, a very good little discussion. And we can't really, like, address what we're kind of saying. What we're saying is the system kind of sucks, and we're just kind of playing within this broken system until what pops. Because we can do all the tax incentives we want, But to me, I don't know, you might agree with this. It's very similar to money printing. The moment you give like a very fat tax incentive that doesn't really like go the way your model thought it would go, it might even be worse than money printing. Like, because then you're really making whatever you're using pretty fake. Like it's pretty just like it's just numbers on a computer screen at a certain point in time, which is, well, from my
incentive structures really are an interesting piece in all of this. What you incentivize, you want to make sure that that's something good for the vast majority, right? You want to make sure that it's something good for the future. Like, why would we incentivize people to smoke crack cocaine? We wouldn't do that because it's not good for people, right? So we don't incentivize that. We actually disincentivize it. Why do we incentivize families? Because more families mean more stimulation in the economy. Why do we give tax incentives or tax cuts or tax credits, however you want to spin it? I don't know the correct terminology, but why do we give tax incentives to businesses? Because they stimulate the economy. It's not just like, oh, it's just free money. Like you're stimulating the economy, right? You're adding something of value to the economy. Incentive structure is huge.
I don't know the Michael's client list over here or anything, but as the tax expert, are there not this is not a good term, but like, are there relatively just stupid things that you can get incentives for your customers? Like, are there like just like regular, like you just year over year, you're like, yeah, we're getting this tax incentive. I don't really know if this is helping the world per se, but my client's going to get the tax incentive. Yeah, I mean, like how many things are there like that?
My responsibility to my clients is, I am for them first. I think you look at the CPA industry in the past, and that's where kind of the CPA industry is changing. A lot of the population considered CPAs as like the gatekeeper between the IRS and themselves. So not necessarily the CPAs on their side, they're just making sure they're doing everything to be in rights for the government. But now there's a ever evolving, which is again the access to information. The CPA industry is more evolving into, you want to find a CPA that is pro tax, pro client. It's you and your client versus the IRS is a very hard black and white way to look at it. But really, it's my responsibility to my client is to help them out, and that's where that's kind of go back to the very original of our conversation today. That's where I kind of gravitate towards entrepreneurial small business owners is I want to help them because I think they will help stimulate the economy and anything greater than just giving your tax dollars to the government to do a lot of things that a lot of half of the population doesn't necessarily agree with because we're factored into two party system essentially. So to kind of go back to my focus, so it's my responsibility to know all of those tax incentives or research them or be knowledgeable on them. As for whether I necessarily agree with some of them or not, I mean, that's a different story. I can see the approach and understanding and the theory behind every tax incentive. In my personal opinion, do I think it's actually going to work or do what it's supposed to? That's a different story. So there are some that are definitely like, hey, I agree with this one more than I agree with that one. But but yeah, my responsibility is to know a client, know their situation as much as I can, and find those tax incentives for them.
Why do you feel like over the course of like time, you guys as accountants have become less gatekeepers in a sense and more, like you're saying, client driven? What's the biggest reason for that? Just because it's more lucrative for you guys in your businesses, or just like I don't know, like
as the CPA kind of code to our clients is everyone thinks of some CPAs may charge whatever your refund is, I get 20% of it. Like that's technically against our code of conduct. Like we cannot do that. We charge CPAs what they charge on an hourly basis, regardless of how much you get back or have to pay in, whatever that looks like. Where I think this shift has happened is the consumer, the client, has become more knowledgeable. Before knowing tax laws and tax information, you had to go to your library and look it up or follow stuff. Like they didn't have access to this information. With the boom of the internet, you see an article every day about, hey, have you heard about this tax incentive? Ask your CPA. And so now it's become more on our shoulders of, hey, my CPA is not doing that for me. Why not? And you come to that. So it's become more of a responsibility for us. And that's where I think you see a lot of shifts in our industry too. The CPA industry it's kind of weird. It reminds me of kind of the engineering industry. You see a lot of very old CPAs that are close to retirement, and then you see a lot of really young CPAs. I don't think you see a lot in the middle. A lot of the older CPAs are much more of that old factor of, I'm the expert. I know what I'm talking about. The client doesn't know what they're talking about. So that's that gatekeeping. And the younger generation grew up trying to learn all these things. So they want to help their clients. So that's where I think, access to information, internet, tax knowledge being out there and eligible to the everyday person is what kind of created this shift.
Michael, what are all the services that you guys provide to your clients? I know you've got a ton of different things, bookkeeping, and what are all those things?
So the firm I work with, the RCM, Griff Show, we are a full service CPA firm. So anything that you would need a CPA for, we do. So my specialty lies in the tax area. So when people think CPA, a lot of times they connect it with taxes, but CPAs do a very broad, much more than just that. So I specialize in doing tax work for clients, tax consulting, tax strategy, tax prep, whatever you want to call it. And then we also have an audit department. So, bigger companies or banks that would require audits for companies for loans, things like that. They may require an audit review, some type of assurance work. And then we also do basic, your bookkeeping, accounting services, if you will. So whether it's a small business owner that just needs someone to do his bookkeeping because he doesn't have anyone else that can do it, or accounting services when they just anything that you need, a fractional CFO type person that would come in once a month to kind of help, or they need someone to help with their payroll, things like that. So it's just kind of your full service CPA firm. And
if somebody here in Tulsa wants to get connected with you, how can they get connected with you?
Yeah, so just Google Regier Carr Monroe Tulsa. We actually do have 3 national offices. So we have one in Tulsa, one in Arizona, and one in Wichita. So we're in 3 different states. But yeah, so if you just kind of Google a firm, you should be able to find a way to get in contact with me there.
Yeah, I think the easiest one is just RCM Tulsa. If you Google RCM Tulsa, you guys pop up. So RCM Tulsa, go check those guys out. I use Michael personally. He's helping us with our show, and it's been a pleasure working with him. I mean, it's the communication's great. I love working with younger people because, like, instead of having to be so formal, like, we can text back and forth on certain things. Some things you got to be a little bit more formal with, I guess. But it's been really good working with you, man, and we appreciate you coming on the show and sharing a lot with us about how crypto and Bitcoin are treated as far as taxes go. So, man, we appreciate you hopping on with us. We'll definitely have to have you on again at some point in the future.
Oh, of course. No, I've enjoyed talking about it. It keeps me fresh and making sure I'm up to date with my crypto knowledge too. So, definitely, crypto laws will ever be changing. So, yeah, next time that there's a big update or something, I'll definitely have to come back and update you guys and the listeners.
Now, before you leave, I do have to ask one question.
Yes.
You're talking about the internet, basically, like, kind of decentralizing the information aspect of what you do a little bit, I think a little bit right, because it is still a very time consuming thing to keep up with a lot of these tax laws. So at the same time, yes and no, people are smarter, but are you annoyed by the TikTokers, like the TikTok tax consultants? Because, like, listen, I'm going to tell everybody right now, I'm on TikTok like every other week. Like, I delete it once a week and then I get it back, and then I delete it and then I get it back. And I always get onto, like, the finance side of it. And man, like, there's a lot of tax experts on TikTok. And now I know a lot of them are brokers, okay? But they say a lot of interesting things. Like, does it make your job also harder that there's a lot of that stuff out there too?
Well, in my personal opinion, it doesn't make it harder. If my clients are if taxes on their forefront, I appreciate that. I like having more engaged clients than ones that don't know what they're talking about. Because the more engaged clients, sometimes it's like you don't always have a good tax answer. Like, sometimes it just is what it is. And so sometimes whenever I have to break bad news, hey, you owe the government X amount of dollars, they take it out on me. And so the ones that are more knowledgeable, I can talk through the explanation, and they see it, and they don't not necessarily. I know it's a misdirected upsetting anger, but it is. But honestly, it's my brother's the biggest person that he'll send me a TikTok or says like, "Hey, is this true?" I would find probably they're about half true. Almost everything I've seen is about half true. There's parts of it that yes, they're right, but then there's parts of it as yes, technically you can do that, but it's not necessarily legal, if you will.
It's good marketing.
So there's a lot of things. It's like yes, you can do that, but if you ever got audited and the IRS found out, they'd probably throw it out. Maybe not in the sense of you're going to get the book thrown at you and go in the slammer, but they're going to disallow it. So there's just it's about half true, half exaggeration, and so for me, it's like if they bring it to my attention, I can explain that to them, and because a lot of times, for me, I can't do a lot for a client if I don't know the whole story, and so sometimes there's something aspect of a client that they may qualify for some tax incentive or some tax break or something to that effect, but if I don't know their story or know that information, I'm not going to be able to. So if they see a TikTok, they're like, "Hey, I'm kind of relevant to that." They bring it to my attention and allows me to be better for my client. So I don't hate it. My personal perspective, I'm sure there are people that do hate it. But yeah, so the misinformation is what kills me. So as long as someone gets corrected, I'm great with it.
Cool. Good.
Good deal. Well, Michael, we appreciate you coming on, the senior tax strategist with Regier Carr and Monroe, more commonly known as RCM. If you guys are wanting to connect with Michael, go Google RCM Tulsa. They'll pop up. They're a pretty widely known firm here in Tulsa for sure, and I'm sure elsewhere in the country. So, Michael, we appreciate you coming on. It was a great time, brother.
Of course, it was great talking with you guys this morning.
All righty, we'll see you. Have a good rest of your weekend.
Thanks. You too.
Enjoy that birthday party.
That 4-year-old birthday party it sounds like it's going to be pretty fun. I don't know if we talked about that before the show started or after, but yeah, Michael's headed into some fun. He's got a 4-year-old birthday party. Should be a good time. So what'd you think, man? That was very insightful. I mean, just to kind of go through some of those basics of it. I mean, I'm sure there's hours and hours more conversation we could have on it, but that was good.
I think the biggest thing is just that he very clearly is very good at his job. Do you know what I'm saying? And a lot of the time on podcasts, the Notion guys, and it's cool, Nick. I'm glad you plugged him as well as you did, because we do have some listeners now. We do appreciate you guys. We don't know if you stick around all the way to minute 90 per se, but we do have listeners. So it's good that you plug guys that are good at their job. And I think what we do that's interesting on our podcast is we're not really getting a lot of huge, big name people. No disrespect to some of our guys. We've had some people who do have some followers, but just because somebody has followers doesn't mean that they're smarter or have more information or know more. The guys like Michael, I can almost promise you, know more than people who have 200,000 followers on TikTok and, like we were just saying, spewing you some mostly very offensive tax language on TikTok that just sounds good, but it's not really going to help you in the long run. So I think it's cool that we're offering people these really interesting and intricate perspectives into. It hasn't just been taxes. We've had our guy Greg Mayfield came on, and he was just talking about. I mean, he's just talking about industry. We've had Kyle come on, who, to be honest with you, no disrespect to anybody, has been my favorite guest thus far, because I still think Kyle is the smartest. If you guys have not listened to that Kyle Jackson podcast, listen to it.
Number 26.
He is legitimately one of the smartest people I think I've ever met in my life. He was just so smart. He just knew everything. He literally knew things about everything. And I'm telling you, he has 30 followers, guys. So does it really matter about followers? Are the people in this world who know the most going to have the most followers? I'd almost guarantee you they don't. I think a lot of really intelligent and smart and hardworking and good people don't even really like social media anymore. They don't view it the same way Nick and I are viewing it here. We're trying to spread good information, but there's a lot of people out there that are just trying to make a lot of money or, get rich quick or grow the podcast fast or whatever. They're not doing it as organic as we're doing it here. So just keep that in mind. But we appreciate our listeners. You know what I'm saying? And we do appreciate Michael coming on, because, dude, that was
Yeah,
like,
Michael's a sharp guy.
Yeah.
I've known him for about 2 years or so now, and whenever I'd initially met with him, I was working with Inspire at the time, and I was trying to find an accountant that I could use as a referral. And so we had an initial meeting and just kind of talked about, what's your approach, man? How do you view taxes? And I had a couple of those meetings with different accountants, and a lot of them were on the very conservative side. They wanted to pay everything that they thought they had to pay, and if we get a big refund, we get a big refund. And that's just the most inefficient way to go about it. And everything that Michael and I had talked about now are several conversations and all the conversations that we've had up to this point about taxes, about finances, about investments, about money. He's been very strategic in his thought process, and it's definitely aligned with mine. So I'm excited to have guys on like that are knowledgeable in their industry. I love what you said on the radio show the other day, last week or whenever it was, when they were asking, hey, would you go into Bitcoin full time? And you were like, well, no, probably not. I want to bring Bitcoin to my industry, right? Which is, again, referring to Brian Harrington that came on the show several weeks back to talk about personal finance. I mean, that was a big deal for him, was bringing Bitcoin to your industry.
Right.
And that's so big time. And so, yeah, I'm definitely excited to have guys on like Michael that are knowledgeable in their industry, working to bring Bitcoin into their industry as efficiently as possible. And if we get to plug some people and he, gets to talk to a couple of people because he was on the show and somebody heard him, freaking cool, man. Sweet,
I got one guy who's going to be talking to. It's going to be me. I'm going to be talking to him. I'll tell you that much. I'm going to be asking all kinds of questions. Now that I know he said he likes questions, it's going to get asked a few questions. It is what it is.
Beautiful.
But yeah, anything else to add to the cast today, sir?
Man, let's think. At this point that the viewers and listeners are listening to this will be 2 weeks from now. We are now 2 weeks ahead on our filming. Today, I posted episode number 27 with Sean Lavery, otherwise more commonly known on Twitter as @BTC Plebeian. Posted that one today. I'm excited about that one. That one was fun to go back through and listen to, but yeah, man, I'm excited. I feel like we've got a lot of good momentum here with the podcast. I'm enjoying the content that we're producing. I'm having a good time, interacting with people on Twitter. We just filmed last week with another guy that we had met on Twitter. That one will be posted next week. Yeah, I think next week. Man, I'm just having a good time, man. I'm happy to be here with you every Saturday, and I'm happy that we've got, more and more listeners every single week. So we appreciate you guys listening. Come hit us on Twitter that way, @Nyc Griff Show on Twitter. That is @NYC and spelled out A&D. Griff is GRIFF Show. Nyc and Griff Show on Twitter. Come hit us up. If you want to be a guest, we'd love to have you on. Let's share perspectives and broaden our own as we go. So we are excited to post another episode today. We're excited to post another episode next week and the week after that and the week after that. And we appreciate you guys listening.
We're on a content train, fellas. Content.
Absolutely.
Train.
Well, you guys have a killer weekend and week, and we will see you next time. Peace.